Wonderful. Thank you so much for that kind intro, my friend. I really appreciate it. I do want to just say thank you for taking the time to get this together. Took a lot of work on your part to get a bunch of traders together, all in the same room, so we can share ideas and talk and help enrich lives. So I just want to say thank you, my friend, for doing this. It's been a really great experience, ladies and gentlemen. I appreciate everyone who is here. Thank you for your time. It's going to be a really wonderful opportunity to chat with everyone. Let me get this question box pulled up and make sure everyone can hear me and see my screen as well. We're looking at ticker symbol LAZ. So if you guys can see LAZ, type in a 1 into the chat box just to make sure that we can see my screen. It should be okay. My monitoring computer looks good. So wonderful. Let's dive in. Thank you, Martin, for that one. I appreciate it tremendously. What we're going to be discussing today, folks, is I don't have a PowerPoint. I don't present with PowerPoints. Not that it's a bad thing at all. I just think that I prefer looking at charts all day. And as traders, since that's how we make our money, I figured let's just keep an eye on our charts and present from there. What we're going to be discussing today is gaps, and specifically how gaps move on blue chip stocks. How gaps move on blue chip stocks, and specifically how to day trade those. What to look for, what to focus on, and how to understand their sentiment. Because realistically, if we can get an idea of the sentiment of a gap, that is what we are working on focusing on. How to understand the sentiment of a gap, what the gap actually means. If we can nail that down and understand that aspect, that approach of the stock market, that approach of day trading, we can truly have a wonderful understanding of what a stock will likely do. Because remember, as you all know, stocks are comprised of people. The stock market is organic. It's like the ocean. It is comprised of living, breathing things that help it stay alive. And it's comprised of waves. Some are bigger than others. Some move better than others. And if you stay in the ocean too long, bad things can happen. So let's dive in to today's discussion. What we're going to talk about is, like I said, blue chips. Let's first define blue chips really quickly. So most of you probably know blue chips, what blue chips mean. Realistically, blue chips are very often popular big name stocks that pay a dividend over 2%. That's usually what a blue chip definition is. Very often, a lot of people say if it's on the Dow Jones, if it is on the Dow Jones, it's a blue chip. That's very frequently what a lot of people say, and that's not an incorrect definition. However, one of the definitions I want to take a stand on is just simply how you approach these gaps and how you approach these stocks on really big days like earnings. So it is earnings season right now. That's why I'm really excited to be presenting for Traders Talk Live during earnings season, because this is when gaps are most prominent. This is when they happen most frequently, and we wanted to discuss how to trade those. So that's kind of the definition of blue chip stocks, but specifically, I like using the definition that blue chip stocks can just be a big name company, even if they don't specifically pay a dividend. If it's a really, really huge name company on earnings, then I will be discussing how to play it and how to analyze the gap. So let's go ahead and kind of dive in. And this is actually a really good one that we're looking at right now. So we have ticker symbol LAZ, Lazard Limited. This is a financial investment banking company. This stock, I do not believe, is on the Dow Jones. However, they do pay a dividend. So what that means is, since a stock pays a dividend, I normally consider any stock that pays a dividend to fall in line with kind of the analysis that we're going to be looking at today. If it pays a dividend, there's going to be a lot of people who get into that stock to make money with the dividend. As simple as that sounds, it's kind of apparent that some people will buy a stock just to get the dividend. Now, what does that mean for us as traders? Well, one thing very simple. When the stock gaps on earnings, you have a lot of people who are going to sell to lock in profit. That's what we have. So when the stock gaps on earnings, if it gaps up, okay, so if it gaps up, you have a lot of people who are going to sell to lock in a profit. That's very, very frequent for big name blue chip stocks. Happens all the time. So people who are buying a stock on a dividend, they're just simply buying it because of the dividend. And it doesn't matter if the dividend happens before earnings or it happens after earnings, but people are going to be buying stocks based on dividends. And if you get a gap up on earnings, then people are going to be looking to sell that stock to lock in a profit very frequently. So what does that mean for you as traders? Well, as a day trader, what you can focus on is some really easy steps. So here's kind of the steps that you can focus on for your day trading. Number one, pull up the daily chart on a stock. Okay, so we're going to pull up a daily chart on a stock. So this is, again, ticker symbol LAZ. I'll kind of move that over here so we can see it better. So step number one, you're going to want to pull up the daily chart. Now, the market is open right now, so we can actually probably consider and discuss some actual live day trades while the market's open and kind of talk about any gaps that you guys have questions on. We can go and look at them. The first step is pulling up the daily chart, and the second step is once you have the daily chart pulled up, analyze the gap type. And that's actually pretty easy to do. Simply look at the previous day's candle and get some insight on that particular candle. So for example, on ticker symbol LAZ, if I zoom in here and let me turn off these long-term moving averages for a second. So if we're looking at the previous day candle, type in a 6 into the chat pane if you agree that yesterday's candle on LAZ was a bullish candle. So LAZ, white candle. I know a lot of you use red and green candles. So green candles and white candles are the same in my particular experience. As far as just setting it up, I just have always used white and black candles. So white candles for me are bullish candles, black candles are bearish candles. Type in a 6 if you guys agree that that is a bullish candle from yesterday on ticker symbol LAZ. Now, what's interesting about that particular candle is we can also look at volume, and we can see that the volume on both yesterday and even the day before yesterday, so just the last 2 days, volume had picked up. You can see a decent green volume bar, which represents a buying amount of volume, some buying pressure. So if I'm looking at the previous day's candle, right, Doug? Looking at the previous day's candle on ticker symbol LAZ, I can see a bullish candle on the daily chart. So what does that mean? That means for a 100% certainty, which is kind of rare to say in the stock market, but for a 100% certainty, someone somewhere in the world bought ticker symbol LAZ yesterday. Now, if we know that someone bought it yesterday, how are they going to feel this morning when the stock gaps up? How are they going to feel? What do you all think? So again, this is the sentiment. This is the part of analyzing the gap. This is the part that takes a little bit of practice, but it really is a wonderful implementation on nailing down gap sentiment. Is asking and trying to figure out the question, the answer of how are people feeling based on a particular setup. So those people are probably pretty happy. They're decently happy because they are profitable. They bought yesterday, so they're definitely making money on this gap up. So if they're profitable, what do most people do when they're profitable? Yeah, You guys are absolutely correct. When most people are profitable, they sell, and they usually sell pretty early. Now, that's not a bad thing to sell, right, to lock in profits. Well, all I'm getting at is if we're looking at day trading blue chip stocks, what our goal and our mission is to be able to look at the chart and kind of get an idea and figure out what specifically are people thinking so that we can take advantage of the movement. So if step one is pull up the daily chart and analyze the gap, that's step two. Step three for me is actually pretty simple. From there, step three is go into a 5-minute chart before market open and draw support and resistance levels based on the pre-market. So step three is go into a 5-minute chart and pull it up and look at the support resistance of the pre-market levels. So we're going to do that right now on ticker symbol LAZ. We're going to come in and look at this 5-minute time frame on LAZ. So the first thing we're going to do is I'm going to draw kind of the pre-market high. So the pre-market high is right here, about $40. So you can see that's the pre-market high because that's where some of the candles were, right there and right there. So some of the candles, that was the high of the pre-market was 40. Pretty easy stuff, nothing too crazy insane yet. And before market open, one of the pre-market lows was right here. So pre-market low was April 25th. That was, this morning. The low of this candle was pretty much the lowest that the pre-market went. So this is step three, is going in and just drawing pre-market support and resistance. Step four might seem pretty easy and self-explanatory, and that's because it is. Step four, wait 3 minutes and then look to play the high wave bullish or bearish candle as a bracket trade setup. That's really it. So the waiting 3 minutes is a key crucial aspect to this step because a lot of traders, when they start day trading or when they day trade for even a long time, when the market opens, they get really excited. They get all pumped up, jazzed up, fired up, and they're just ready to take any trade possible. So they're in a few trades before, 3-4 minutes into market open. What's interesting about this is if you wait 3 minutes, that is a quantifiable rule that you can measure that you get to determine, did you follow your rules or not? So when we're talking about a trading plan, you always hear the term trading plan, follow your trading plan, do your trading plan, all that stuff. You can have a rule that says, hey, I don't trade in the first 3 minutes if it's a blue chip stock. If it's a blue chip stock, pays dividends, or it's just a really big name company on earnings, I'm going to wait 3 minutes. And when you wait 3 minutes, you're going to be looking at a 3-minute chart. So usually I play the 3-minute chart for about the first hour of the market. For the first hour of the market, I look at primarily the 3-minute chart. Now, keep in mind, you don't have to use just the 3-minute chart. You can easily go back and forth between different charts, totally your call, and I do that very frequently. I'll look at the 1 minute, the 2 minute, the 3, the 5. I'll go back and forth and just look at the candles and really try to nail down exactly what it is that I'm looking for. But for the first hour, I really do just kind of keep a good eye on the 3-minute. So this is step 4. Wait 3 minutes and then look to play the high wave bullish or bearish candle. This is the second part of the step 4, is this part, the high wave bullish or bearish candle. So if the candle is not a high wave candle, you can pretty simply move on from the trade. It doesn't mean you don't have to trade it. It just simply means that if you're looking for an exact specific setup, something that you could potentially program into a computer, an algorithm, a robot. You become robotic in your approach. You become so specific that you know exactly what it is that you're looking for. And as a trader, that's exactly what we want. We want to know what we're doing, where we're doing it, why we're doing it, and we want to repeat that process over and over and over. To a specific point, the market should be boring. Trading should be boring. Making money can be exciting, but trading should be boring because you should know exactly what it is that you're doing at any specific point in time, at all points in time during the day. You want to know, this is what I'm doing, this is what I'm focused on, this is what I like, and this is how I'm going to trade. So what do you all think? What's the definition of a high wave candle? Someone asked that, and that's a very valid question. How do you determine a high wave candle? Pretty easy. A high wave candle is any candle that has a upper and lower shadow and a small candle body. The bigger the upper and lower shadow, aka wick of the candle, the more indecision. The more indecision and the bigger the retest will be when it breaks out. Now that's a very key aspect to this discussion, folks. So we're going to talk about that in a little bit more detail in just a few minutes. But a high wave candle is any candle that has an upper and lower shadow and a small candle body. The bigger the upper shadow and the lower shadow of the candle, the more indecision and the bigger the retest will be. So folks, this is a specific gap that is actually literally perfect. Wonderful in every way. This is your high wave candle on the 3-minute chart. You have an upper shadow, you have a lower shadow, you have a small candle body, everything is great. So the question is then, how would you take this trade? What is it that you would do? How would you approach this position? Well, since again, it is a blue chip stock and people are going to be selling, we remember when we looked at the daily chart, we analyzed for sure that there were people who were profitable from yesterday. So since those people were profitable from yesterday with a 100% certainty, we know that there's going to be a little bit of a pullback on the stock. We, based on step 3, we drew our support and resistance lines. So LAZ pulled right into a pre-market support. So it pulled into a pre-market support and then started bouncing. So your setup realistically would have been getting in above the high of that bullish high wave candle, and your stop loss would have been right below the low of the previous support and pivot that was made on the trade. And your target on LAZ would be right here at this resistance, the pre-market high. So I'm going to pause here for just about 10 seconds, maybe a little bit longer. Does anyone have any questions so far? We're going to do a lot of real life examples. We still have an easy 40 minutes to go. But does anyone have any specific questions at this exact moment about this particular process? Or specifically this trade or the setup or the target or the entry? So I'll let you guys write in any questions if you have any. Let's see, beautiful. Gorgeous. Let me make sure this is going good. Perfect. That's going good. All right. Robert Curran says Jeremy's the best. Thanks, man. I appreciate those kind words. So again, if you guys have any questions, let me know. So what we're going to do is I'm going to go explain this part. When we said that the bigger the upper and lower shadow wick of the candle, the more indecision it will be when it breaks out. So the bigger the retest. I'm going to go pull up a recent trade that I took on TEAM, TeamViewer, and this was honestly just a few days ago on a really nice gap down. So this was a 1 minute chart. So I have been talking about 3 minutes. I get that. But if you ever see a candle like this on the 3 minute, the analysis is the exact same. So I just want to kind of bring it up to you so that you all know. If you see a candle like this on a 3 minute chart, it will react the exact same way. So on TEAM, this is a high wave 1 minute candle. Very pretty high wave, beautiful upper shadow, beautiful lower shadow. But we can easily see that the upper shadows of this candle is huge. Upper shadow is huge, lower shadow is huge. It's a massive candle. So that doesn't mean that you can't take the breakout of that candle. You certainly can. And I do that pretty frequently. On this particular trade, I tried to take the breakout with a stop limit entry, and I got skipped on the trade. But that's okay. What I was looking for is a retest of the candle. So when it broke out, since this is a really, really massive high wave candle, I did not just simply take an entry at the high of the candle on a pullback. I went a little bit lower, not a lot lower, but a little bit lower. So this is where most people probably would have set up their entry based on that high wave, just saying, hey, get me in this trade off of the high of this candle. But remember, what I just talked about a few moments ago is expect a little bit of a bigger retest. So the one that I set up was right here, 102, it was actually 102.52 was the entry that I had, and that was just simply based on the analysis. This was a limit buy. That was based on the analysis of, okay, you got a really big high wave candle. Most high wave candles, when they retest pretty large. It still should not break this low for a long time, but you're expecting it, instead of just retesting to the high and bouncing, you're expecting it to come down a little bit lower before it bounces. So that's just kind of like an explanation of what I mean by, if you have a bigger high wave candle, look for it. If you don't take the breakout of the candle, which is fine, it's fine if you do, just expect or know that you could, and most likely will, get a decent size retest. So let's go look at Facebook. Type in a 1 if you guys want to go look at Facebook. I know a lot of people are asking about the Facebook gaps. We're going to go check that out. Joseph said, would you have been stopped out on the second 3-minute candle? So Joseph, it's a very good question. He's asking about ticker symbol LAZ, and the answer is no. So Joseph, let me hop back over to LAZ. So you would not have been stopped out in the first 3-minute candle, because remember, you're waiting for 3 minutes. So after 3 minutes goes by, this candle gets closed. This entry is a stop limit order, right? So that's how you get into a trade when it's breaking out. So this is how you get into a trade when you're playing a breakout, is you use a stop limit entry. So a lot of traders don't actually use stop limit entries, which I find is kind of crazy, because that gives you the opportunity to set up the trade before it even happens, which means if you have the appropriate broker, you can set up an OCO order, which gives you the opportunity to set up the trade, kind of walk away and just forget about it. So very good question, but no, you would not have been stopped out. Once that second candle comes in, it was far below your entry, so you wouldn't have gotten triggered. This candle comes in, this candle comes in, this candle comes in. Your triggering candle would have been this one right here. That would have been the one that you would have gotten triggered in on. And if not that one, you would have gotten triggered in on the pullback at 9:06 Central, 10:06 Eastern. It's a very good question. Kathleen says, how'd you get the pre-market on the chart? So Kathleen, it depends on the charting software that you use. What charting software do you use, Kathleen? You should already have pre-market, depending on what broker you use. But realistically, for me, this particular software is called TradingView. So I really like TradingView because it's browser based. You can use it at work. It's really inexpensive. A lot of good social media sharing applications. Charting is really pretty. So you have to pay extra for extended hours data. But if you're a day trader, that is something that you're going to want to have is the extended hours for sure. Great questions. So Anil says, do you have a sell on the next candle? Why? I don't know what that, can you re-ask that question, Anil? I'm sure if we were in the same room, I'll be able to understand what you mean, but I don't know exactly what you mean over text. So if you can retype that question, I would appreciate it. Kathleen says, I have Ninja, but I wondered about the software. Yeah, Ninja's a really good charting software application. I like Ninja Trader. It's really good, but you would certainly want to you would certainly want to explore Ninja Trader's extended hours application. I don't know if you have to pay extra for that data or not, Kathleen, but you might have to. Robert, it's a very good question, my friend, about the VIX. I appreciate you asking, but that's just going to be a total rabbit hole for this particular discussion. So we're just going to save that one for another time. Alexandra says, when I try to do a stop limit order before market open, I get triggered on the trade immediately at market open, not the price I set up, but I may be doing something wrong. You are. Yep, you are doing something wrong. So if you do a stop limit entry, you will only get filled if the stock gets to that price or higher. I do have a free article on stop limits. It's really good. So let me post that in the chat pane. And if anybody wants to get it, you can easily go to my website. It's called reallifetrading.com and go to the article section and just type in stop limit. These are orders that very few people use effectively, but this is an incredible. So I'll post this in the organizers and my boy can get that sent out to you all if you would like. I think I can also do this. I'll send to all. So yeah, that is, as far as stop limits, if you get triggered in before the stock hits your price, Alexander, you are doing something incorrect. Because with a stop limit, it will only trigger you in if the stock price hits that level. Anil says, you have a candle with spikes on both ends with a small body. That's a qualifying candle. The candle next closes below this candle. That is absolutely correct. So this particular candle, this is the candle that you want to get in bullish, right? So the strategy is wait 3 minutes. So type in a 6 if you guys are good with that, if you can understand. In this particular strategy, even in day trading, a lot of day traders, you're going to want to wait at least 3 minutes. So when you wait 3 minutes, this candle closes. So what I'll actually do is I'll pull it up. We're going to go look at an example right now. So this 3 minute candle closes. The close of this candle is 39.06, and your entry, the high of it would have been 39.20. So the high of the candle is 39.20. So you would have done a trade that would have looked just like this. Let me hop over to Thinkorswim and I'll show you. Okay, so this is how you would have set the trade up. So we come over here, go into 3 minute time frame. And if you're looking at getting in above the high of this candle, this is how you do a stop limit order. So it would be a buy custom OCO bracket, and you come down here to where it says stop limit. So in a stop limit scenario, ladies and gentlemen, you're going to have a stop and you're going to have a limit. So a stop order, very few traders properly understand what a stop order does. Most people think stops are bad. Stops can get you out of a trade, and they can also get you into a trade. So a stop limit, a stop is just an alert to tell the broker what it is that you're trying to accomplish. So on this trade, if we were going to have set up the trade to get in above the high of this candle, so that would have been 39, let's just say 39.23, okay? That's the stop limit entry. 39.23 would have looked like this. 39.23 and 39.23. So your limit order would have been 39.23 and your stop would have been 39.23. So both prices would have been the exact same, your limit and your stop. The stop, again, as a reminder, is just an alert that tells the broker, hey, pay attention, I'm trying to do something. Stop what you're doing, I want to try to get into this trade. So that's what a stop limit order looks like in a broker, is you would go in and actually set that stop limit. We can go look at a trade that's happening right now, and I can show you. Let's go over to Facebook and just see what it's doing, because a lot of you were asking about Facebook earlier. So Facebook, this was a really good scenario. So let me go ahead and go through some of the gaps, some of the lists. So this is the daily chart. Facebook, not a blue chip stock, right? Because it doesn't pay dividends, but it's a very big gap up. What do you guys think? Do you think that there's people who are profitable on Facebook? They're looking to lock in their profits. And the answer is yes, right? Absolutely. People definitely profitable on Facebook, so they're looking to lock in profits. Facebook, not a blue chip stock, but again, specifically, it's a very big name company on earnings. So very big name company, so it's not a blue chip, but I play it like it's a blue chip, which means I wait 3 minutes, and I draw my pre-market support and resistance lines. So let's go back in time and draw some pre-market support and resistance. Okay, so this is before market open. So the first thing that I can do is I'll draw this lower trend line because, you know, that makes sense. Second thing I'll do is I'll draw this line, which is a pre-market resistance. We'll make that pink. There's a pre-market support right about here. We'll make that pink. And there you go. So Facebook, up huge. Not a blue chip stock, but a very big name company on earnings. So people are profitable. People are looking at selling to lock in their gains. And when Facebook gaps up, this is the 3-minute chart. First candle that opens up, here we go. So we zoom in, the very first candle that opens was a bullish candle with an upper and lower shadow. Really, really big volume. So if you were looking at getting into this trade, you would have looked at either playing it bearish below the low of this entry right here with a stop right here, or you would have waited for it to break down, retest this support, look to get in there, and then short it on the breakdown lower. Because remember, a lot of people are profitable on Facebook, so they're looking at getting in short. All right, so this is the retest right here. So again, bullish candle, breakdown, here's the support, retest, and then here's the potential rollover. So what we're going to do now is we're going to go to present day, like exactly what's happening at this exact moment in the market on a 3-minute chart. This is Facebook right here. So if I wanted to set up a trade on Facebook to get in bullish at 194.92, okay, if I want to set up a trade to get in bullish at 194.92, I would set up a stop limit order. So if I go over to Facebook, hop over to Facebook, come over here, 194.92. If I go to buy custom OCO bracket, and I would select stop limit, 194.92 is the limit, 194.92 is the stop. So again, this is not a stop market to get out of a trade, right? This is a stop buy order. This is a bullish position, stop limit 194.92 by 194.92. That is the entry that will not trigger unless Facebook went above 194.92. Beautiful. So any questions so far? Because we're going to go look at a few more of these and kind of talk about, we're going to go look at some trades that are happening right now and kind of analyze them and just discuss what's most likely going to happen based on the gap and based on the candle structure. Okay, so we looked at Facebook again, and what I thought was a pretty easy sell, pretty easy short. Let's go look at ServiceNow, ticker symbol NOW, and go look at a 3-minute chart. So ServiceNow on a 3-minute chart, this is what's really interesting about this particular trade. There's a lot of goodness here. So if we're going to analyze this 3-minute chart, there's a lot to take it here. Alexander says, I get it now. I was doing it wrong. I thought a stop would be a lower price. Beautiful. There you go, Alexandra. I'm glad that I could help you with that. At least you got a good takeaway from the session. Beautiful stuff. So let's talk about ServiceNow. Let's discuss this particular move. First and foremost, what you'll notice is that ServiceNow is at an all-time high. It's never been this high in its entire life. Never, ever, ever. So if we go into a 3-minute chart, one of the things that a lot of people forget about is, again, just simply trading support and resistance levels. If you're looking at ServiceNow, this right here in the pink line would have been a really good resistance on ServiceNow. Right? That was the pre-market high right there. So the first 3 minutes, if you're waiting on the first 3 minutes of ServiceNow, you did not get a high wave candle. You actually got a really big upper shadow shooting star candle. So that's not a high wave candle. That is specifically a shooting star candle. So there's a distinction between high wave and shooting star. Secondly, I'm not going to take a breakout of that candle even if it was a high wave, because a breakout of that candle is an all-time high. So one of the things that I would highly suggest considering is look at the stocks to figure out if it's an all-time high or not. Because even if the stock is not a blue chip, if the stock is at an all-time high, you don't specifically want to buy there. I've always thought, in my personal opinion, that's just a really bad approach to the market. A lot of people say, oh man, all-time high, that's the time to buy the breakout. And I always go, really? You want to buy something higher than it's ever been, ever? Or you don't want to wait for a pull? That just doesn't make a lot of sense to me. So if you're wondering, do I buy at all-time high breakouts? The answer is no, I don't. Because there's no real valid reason to do so. So on ServiceNow, how would you have played this trade? Well, actually, this candle is kind of a high wave candle. It has a equally high upper shadow, equally high lower shadow. The candle body isn't small, but it is an indecision candle. And so is this one. This is also an indecision candle. So my entry would have been above the high of that candle, and my stop loss would have been below the low of these two candles, and I would have simply exited everything at the all-time high. Now I know that the risk reward wasn't that great, but I'm here to share with you a dirty little secret. Now maybe this is just my secret, maybe I'm not the best trader in the world. Well, I know for sure I'm not the best trader in the world. I've never claimed to be the best trader in the world. I am the best educator in the world when it comes to the stock market, in my personal opinion. That's just my opinion. I'm allowed to have my own opinion. But I'm not the best trader in the world. But what I can say is this is my dirty little secret. Maybe it's just mine. Maybe no one else shares this. But very frequently in day trading, I do not get 1 to 2 or better risk reward ratios. Very frequently, like 85% of the time. So if you're thinking like, what does that mean? All right, well, let's think about it. If I'm day trading, my job, well, not even day trading, if I'm trading in general, most people think that my job is to make money. That is the incorrect assumption. When you trade, your job is to not lose money. So when I have traders who I work with or coach with or whatever it is that we're focused on, it's not about how much money you're going to make. It's about how much money you don't lose. What do I mean by that? For example, on this trade with ServiceNow, if I took this position, which I did not take this trade at all. Could have, but I didn't. I was getting prepared for this webinar, so I didn't take any trades yet today. If I'm looking at this particular trade on ServiceNow, and I take this trade with $500 risk, okay? A $500 risk on this particular position is very easy to calculate the amount of shares. So 264.40, my entry minus 258.71, and that will come up with a specific number. That number is my stop loss value, and that is $5.69. So I divide 500 by 569, and I come up with how many shares to buy, and that will give me the exact number to lose. That's 87 shares. Okay. So this would have been an 87 share position. Not a huge position, nothing crazy. Kathleen says, I'm enjoying your teaching. Thank you, Kathleen. I appreciate that. We still got solid amount of time left. So if you have any questions, let me know. So we have, this is the math formula right here to determine your risk size. And 1 to 2 risk reward ratio, right? I very rarely, 15% of my trades get better than a 1 to 2 risk reward ratio. My job in trading, so think about this, pretend that you work for me and I get to set the ground rules and I get to tell you what you should focus on and what you should do and what you should practice. I will tell you, just don't lose a lot of money. Focus on risk control, risk management, and risk mitigation. So on this trade, this position right here, an all-time high. Never been higher in its life. So if I'm in the trade and I'm actually profitable, what do you all think, ladies and gentlemen, yes or no? Can you control if you get into a trade profitably? Most people might say yes. The answer is no. Because when you get into a trade, we have no idea what it's going to do. We can put the probabilities in our favor, that's fine, but we have no idea what exactly is going to happen on the stock. Again, we could have a really high probability, high degree of certainty. 85%, 90% of the time, we might know what we think is going to happen, but sometimes we're going to be wrong. So since we cannot control our ability to be profitable, what we can do is control our risk. So on this trade, I would have made 0.7 risk units. So if one risk unit on this trade is $500, how much would 0.7 risk units be? Who wants to do that math for me? If my risk is $500, I already know the answer, but I'm just excited to see if anyone else out there knows the answer. So on this particular trade, if one risk unit for me is $500 and I would have made on this trade 0.7 risk units because I would have sold my entire position at the all-time high, how much money would I have made on this trade? You can put on some Jeopardy music, but again, the math is pretty easy. If anyone's busting out a calculator, I'm just waiting for you guys to throw it in the chat pane. See if you guys want to go back to second grade for me and practice your decimals and multiplication. So here's the math. Here's how you would put in the calculator. 500 times 0.7 equals. Okay, that number will be $350. Now, why does this matter? What's the point of me telling you this? It's a very key aspect, ladies and gentlemen, huge takeaway. Type it as 7. If you've ever been into a trade, been profitable, and then ended up giving back your profits on the day. I'm going to go ahead and type it as 7 because I've definitely done that before, but very rarely does it happen anymore. Very, very rarely. Pretty much never. And here's why. As I mentioned earlier, we cannot control the profits on a trade. All we can do, right? All we can do is control our risk. So I know how much my average loss is. My average loss per trade is 0.7 risk units, or about $350. That's my average loss on a trade. And again, the way I know that is because I keep my risk the same for every single trade. Every single trade, I keep my volume, I keep the value of my risk the exact same. So no matter what I'm trading, regardless of how many shares I'm buying, I'm gonna either lose 500 or less or make 500 or more, hopefully. So if my average loss is 0.7, any profit above that, this is the dirty secret. Anytime I am more profitable than 0.7 of my risk, 0.7 on the trade, anytime that happens, I am going to lock in some kind of profit. And depending on where the stock is, if the stock is at an all-time high, all-time low, it's a blue chip and trading into a pre-market support or resistance level, whatever it is, I'm going to do my best to lock in some profit. And then here's the big key. The big key is at this point in time, ready for this? I will just stop trading for the day. I will stop trading. I'm going to be done. I won't take another trade. Now, I know you might be thinking, whoa, dude, that's crazy. Why would you not take another trade? And the answer is because I don't have the risk available. If my average risk is 0.7 on a trade and I just make 0.7 on a win, the next trade very well could be a loss. And if I lose on average 0.7 Rs, then I might go from green to red on the day, and that's insane to me. Why would anyone do that? Because that's entirely your fault as a trader. Like, that's entirely your fault. If you're profitable, you get to decide, do you stop trading and keep your profit for the day and go on to the next day, or do you keep trading and try to get more? And normally, for me, I'm just going to lock it in. I'll be done. So who wants me to analyze a stock that's moving right now? Whatever stock you want, type it into the chat pane, and I'll give you my analysis on the daily level and also kind of the bigger time frames as well. Whatever stocks you guys want, I'll pull it up. I got about 10 minutes left, and then we're going to have some of our other guest speakers hop on the mic and just absolutely crush it. Mr. Hale is in the building. How are you, sir? Thanks for being here. I appreciate it. Anyone specifically have any stocks you want to look at? Anything you're interested in checking out? Otherwise, we can just go through this list. WWE, this was a beautiful one. My girl Kathleen says ACRX, AccelerX Pharmaceuticals. Let's check it out. So the first thing I do on a stock that I've never seen before or heard of is I pull up the weekly chart. So pulling up the weekly chart, what I'm looking for is what is the trend? So the trend on AccelerX is sideways to down. That's the trend. So bearish to neutral. That's the trend on ACRX. So it's like, okay, cool. Trend right now is bearish to neutral. So that means if I'm in a profitable position or I'm getting in bullish, I'm going counter trend, which there's nothing wrong with going counter trend. But if we know we're in a counter trend position, that means we want to lock in profits pretty quickly. We want to take our gains until the stock can become a bullish trend, which I can say on this particular position would have to do this. Once we get above $5, the neutrality, the sidewaysness of this stock would start to break down and we'd have more arguments for a bullish trend. So that's my analysis on the weekly chart. So now I'm gonna hop into the daily chart. And again, looking at the daily chart just the last few weeks, I would kind of have to say the same thing. Because in August of last year, we were the exact same price we're at now. So sideways to down a little bit. So sideways to down some. Now we could make an argument that for the last few months, the stock has been going up, and that would be an easy argument to make. Can't argue that at all. But really, everything in the stock market has more or less been going up since December. So, since that's the case, this is nothing really special. Looks good. Good volumes trading higher. Again, bullishness on the daily chart. The last few days has been pretty good. Weekly chart, you're getting above some of the long-term moving averages, which is good. And the daily, this is the hourly chart. Hourly chart trend looks really nice. So if I were personally playing ACRX, which I'm not, but if I were and I was in bullish, Kathleen, I personally would sell a little bit of my position right now. Just a little bit. Because you're at a resistance, you're at a peak, you're at a spot where people have sold before. And again, the trend on all time frames is sideways to a little bit bearish for right now. So until that trend becomes bullish, I wouldn't expect anything simply sensational on that one. My boy Al Hale wants to look at CNSL, which is Consolidated Communications, down 25% today. So this is a telecom company. Here's the weekly chart, and we can't argue that this has been in a power downtrend for the last 2 years. Just absolute magnificent strong downtrend since 2016. So the question that everyone's going to have on this one is, when will it bounce? I think is probably going to be the big question. So today we're at an all-time low. And it appears that at one point the stock did pay dividends. So if it's down 25% and an all-time low, this one could be one that I could consider to play a long trade on. You'd have to have really appropriate risk on this one. Based on the trend, it doesn't look like it's going to happen today. Although it could, I don't think it's going to go higher today. So the only way I would play this bullish, Al, would be for a day trade. It would be an aggressive day trade. Maybe, kind of best case scenario, you could get something like this. But I don't know what's causing the stock to sell off so hard. But if you do play this bullish, you've got to know that you're bottom fishing. And yeah, it could definitely fill that gap at some particular point in time, and probably will. But the only question is, how much longer will it hold those levels before it keeps going down? Because right now the trend is pretty bearish. Theo wants to look at SNSS, another pharmaceutical company. So again, I haven't heard of this one before. So I'll pull up the weekly chart, and the weekly chart, power downtrends, nothing exceptional about this trade at all. Pure gamble if you're getting in bullish. So the weekly chart just crushing lower, going down, going down, going down, going down, going down. Daily chart, you got recently, very recently, a little spike that happened in March with some decent volume. So you've had a good move, obviously, from 60 to $1.60. So that's a lot of money to be made, unquestionable. If I had to do a wave count, I would count it as a 1, 2, 3, 4, 5. Best case scenario, in my personal opinion, this thing makes it up to like $1.90, maybe $2, and then most likely continues its downtrend for right now. So ladies and gentlemen, I'm going to wrap up in a really cool way. If you kind of liked what you heard today, I have a day trading course and it's entirely free. So if you want to hop over to reallifetrading.com, there's no sales pitch. My mission in real life trading is to enrich lives. And I figured the cool way to do that is just to make all the education free so that you get to determine on your own if you like it and if you like the market and if you like trading. So hop over to reallifetrading.com, click on the free button and click on day trading. And again, I have a really great course that is 100% free. Just because it's priceless doesn't mean it's valueless. So feel free to check it out. A lot of the things I covered in today's class is described in that program. You'll really like it a lot. Totally cool, as Theo says. Now, one last thing. I did write a book recently, and my boy gave me permission to kind of give this out, kind of promote this. So if you are into books, it's a Kindle and paperback edition. I'd love it if you could, if you check that book out. It's called Money Grows on Trees, and it's about the mental beliefs that we have in our brain about money, the thoughts, the perceptions, both incorrect and correct. So if you want to hop over to Amazon, type in Money Grows on Trees, you'll find it. Feel free to check it out. It's $8. And that's it, ladies and gentlemen. That's my time. I want to give enough time for the other presenter to be here, get ready, and get everyone set up. So I just want to say thank you for your time. Thank you for your opportunity, for being here. I hope you all had a nice takeaway, learned something new, and were able to learn more about trading. Thank you for being here, folks. You're amazing. And until next time, love life, live life, and trade it. Bye.